We haven't spoken to you since a month or two ago, and so much has changed, including the crazy banking turmoil that we saw here in the US as well as in Europe. How is that affecting what's happening in South Korea?
It hasn't affected us very much directly because our exposure to the Silicon Valley Bank was quite limited. On the other hand, we are concerned whether the current situation will be well contained. And so far it looks good. But if it's not well contained, then the sudden risk of attitude globally can affect us. But so far it looks okay.
South Korea is such a different economy in the sense that it's so digitized. Is that making it more challenging to contain those risks?
Yeah, sure. Actually, this turmoil gave us a lot of homework to do. For example, like digital banking by the youngsters are much more developed in Korea, and the speed of the deposit withdrawal, if similar thing happens in Korea, can be probably 100 times faster than in the United States. So I think we have to be prepared for this digital age. For example, we now have to increase the level of the collaterals for the daily settlement to prepare for this kind of things happen. And second, in the past, when a bank is closed, for example, it may be okay to actually disburse the deposit within a couple of days. But at this moment, given with social media and the speed, probably it should be a couple of hours rather than a couple of days. And what kind of things the Bank of Korea to do together with the regulator is a new homework.
There are so many risks in the global economy, including the banking turmoil, and yet you're maintaining your interest rates pretty high. And the consensus within the board seems to be very strong.
Yeah.
When do you expect that to change?
Oh, that really depends on, it should be data dependent. We are expecting our inflation rate will go down close to 3% near the end of the year. And we want to be assured whether our expectation is correct. So as long as we are sure that our projection is on track, then we will think about when we're going to change our stance. But it is still too premature to be certain.
You've said premature several times before.
Yeah.
Do you think markets are finally getting the message?
No, actually, but it's not our own problem. In the United States and many other countries, like Canada and Australia, who also pause its interest rate, market think that they can pivot very soon. The same thing happened in Korea. Our investors and the market participants think that our position and our interest rate will pivot probably within a year. But I gave a warning that still their expectations, we think our policy committee members think that their expectations are a little bit ahead of our expectation.
Is that always also because you're perhaps worried a little bit about the weakness of the Korean won, now the worst performer in Asia?
I'm really do not have a big concern on the level of the exchange rate itself. What we are worrying about is actually more like what will be the future path of the oil prices, given the OPEC Plus decide to cut down its production, whether it's going to increase the oil price down the road or not. And then also we also have to be sure what will be the monetary policy in the United States after this turmoil is stabilized, and how soon and how much they will raise the interest rate. So overall, unless this uncertainty is resolved, it's very hard to focus what you're going to do.
But even with the shock announcement from OPEC Plus that they will reduce production, we haven't necessarily seen that spike in oil prices.
Right.
Not now, and it seems that even China's reopening hasn't brought that inflationary wave that we were expecting. So why are you so guarded against a potential spike in prices?
First of all, I think you're right in the sense that now there are two views. This production cut may increase interest oil price, but on the other hand, global economy, because of this turmoil, maybe slowdown may help to, make the oil price have a ceilings. So, but there's uncertainty. So our concern is that, once we are paused, when the inflation, if the inflation path is not going down, we have to recalibrate our policies. So I do not want to give a message that it's sure that our inflation path will go down as quickly as we and the market is expecting. They may be, but they maybe not. So I want to give a warning that we have to really see more data.
It's like you're trying to get ammunition in order to have to fight potential inflation in the future. At 3.5% interest rate, is that enough ammunition?
I think we are in a restrictive area. And also we have raised our rate 300 BPs in the last 1.5 years. So it's a good time for us to assess what kind of impact it will have on the inflation path. So that is one of the reasons why I pause. But on the other hand, I do not want to give a message that this level is restricted enough for automatically to reduce the inflation, because there are a lot of other things we have to consider.
Such as
Oil price, as mentioned, and then also the U.S. monetary policy, which may have affect our exchange rate, which affect our inflation. So we have a lot of things to consider.
But you seem to be focusing these days more on core prices, despite the fact that you say oil prices are important.
Yeah. There are two things. I think first of all, our target is the CPI itself. So we have to really look at the consumer price index, and also because even though the CPI goes down quickly because of the level effect of the oil price itself, but on the other hand, how persistent the core inflation will be is another concern that we have.
The speed at which central banks around the world, and not just the BOK, has tightened seems to be very fast, and also a little bit later than it should have been. Will there be side effects?
Yeah, I think you see that there are, what you have seen in the United States and Swiss is one example of something can break down during this process, and we are also watching very closely how we do not break down something unexpectedly. And at this moment, given that the rapid increase of interest rate globally, I think many of my colleagues in central banking society now may be thinking that there's a time for us to think about how long we have to stay rather than how fast we have to continue to increase. So we'll see.
Governor, before I let you go, you know that every time the BOK releases a statement, we look for every single word and every single changing phrase. How will you signal to the markets when you're changing direction? What should I be watching out for?
I think we will definitely convey how we interpret the data. So we actually enhance our communications. So as soon as I think we see some signs that some new development which make us be certain that the inflation is converging to our target rate 2%, then I will definitely convey to the market.
How?
By talking to you.
Perfect. You reserved that interview for me. Thank you so much, Governor.